So kind of like this one right here. So it's been, dropping in a downtrend for a while.
Mm-hmm.
Then we get down here into this like level of demand.
Yeah.
Then we see this kind of a candle break out of the demand with a relatively high amount of volume.
Mm-hmm.
Um, is this kind of a signal that, buyers are kind of starting to take over or at least add positions in because of the price is too cheap, volume's so dang high, and the demand was, kind of broken like a stop hunt?
Um, so like something like that. This is where, yeah, another good example. Once again, like reading. Well, there's a lot of force, and then stability, and then you still have a lower low, lower high. You have another antenna that looks really good, and you get stopped out. Then you have another one. So all this here, they are all news based.
Hmm.
This is law one, where this is now a continuation of that force, which is now created law two. Then all of a sudden, bam, you have this. So it's, when you're reading that, you're thinking, okay, if once you're in the shoes of the market, it's like, oh, what is it doing? Why did it drop? Then all of a sudden, buyers did come in where you have an increase in volume.
Hmm.
So it's now, how to explain it? You are now, you're aside from being an observer, you are putting your shoes in the markets. It's you're no longer in the first person. So I was just discussing this with another person yesterday, that we are always going to be in a relationship. What do you mean by that? Well, relationships relationships to oneself, relationships with another person, another entity, and this entity will be a person. This will be your friend slash friends, family, boyfriend, girlfriend, wife, husband, whoever, what it is, partners. This particular case, trading or the markets. Um, and that is where, or relationships with work, either way. So anything that's got to do with outer environment, we're always going to be in that relationship. But we also need to define what relationship is. So in this particular case, since we are traders, we are in relationship with the market. And at the end of the day, yes, we are in relationship with the market, but the market is not in reciprocity with us. Does it make sense?
Hmm.
The market doesn't care about us because it doesn't know us. So if you as a trader is in a relationship with the market and you are attached with the market, then you're screwed. Which is, what is that attachment? That attachment is in regards to personal issues that a person will have, such as fear of losing money, fear of missing out, regret, all this type of stuff, hoping. So anything that got to do with a person's ego. So when that happens and you're attached with the markets, then your judgment becomes now cloudy, correct?
Mm-hmm.
Because you don't think now straight, especially when you start to quote unquote hope. So how can we then get rid of that is when we are detached, from attached to detached. When you're detached, then you don't have any judgments, you don't have any opinion, you just see things the way they are. It is what it is, similar what the market is. Hence you will get out when you know it's time to get out. You will stay in when you know when you staying in. So you have pure objectivity. And the other component is to empathize with the markets by you no longer in being the first person, but you are now feeling what the market is doing. So by showing empathy is by you analyzing, feeling what the market is actually really doing within that moment, and you're looking like, hey, okay, it dropped here, stabilized over here, it dropped even further. Then all of a sudden, it went back up. Likewise, over here with this too, it dropped, and then all of a sudden it came back up. So what's happening with that? If you combine it together, then you have a hammer over there. If you combine these two candles together, you have a hammer over there. Selling pressure and buying pressure in the end,
Mm-hmm.
right?
Yeah.
So likewise over here, you have a piercing pattern, you have a piercing pattern. Lower low, lower high, lower low, lower high, higher low. Lower low, still lower low. And then you're gonna go the next day like, it did come back down. However, it didn't want to surpass now this low. You have a higher low over here that created a nice, beautiful trough. And you're saying, oh, okay, then there is something that if you are trading this and you're waiting, you see this like, this might be a good opportunity. However, you do not have a higher low, and then all of a sudden you create a higher low based on 4 hours. You take this trade, and for argument's sake, it is now right here. This is where you're seeing decrease now in volume, still in a downtrend, stabilizing itself at a level of supply. What are you going to do? Take your money and run. That's basically the first step or the common thing that you're going to do, because you might as well take your money. You're against now the trend. You're trading based on a correctional component because there's a lower low. There's no clear cut of a higher low.
Mm-hmm. Gotcha. It makes sense.
And then you have this too. And then now you have a clear cut of a higher low. You have a clear communication now from the market based on the relationship, and it's telling you, say, hey, look, I give you I'm communicating with you that you now have a go ahead in terms of a buy position. So you have 1, 2, 3. In my opinion, this is from what I can see, this is just a minor higher low. Why? Because of this impulse. Unless it clearly breaks, then somewhere, sometime it has to create a clear cloud of a higher low, right?
Mm-hmm.
And did it do a higher low? Absolutely. Now you have through there and you have those. This is now the new uptrend of a correction of this impulse. That's why, yes, daily time frame for hourly time frame plays a much better role, because you can, yeah, it takes slower, but you have time to plan out and think using our logic. But when you're dealing with 1 minute time frame, 5 minute time frames, then you don't really have room for thinking. You're
Right.
just reacting to, okay, it is good, but you got to be quick based on your plan, or we reach to a certain point, I'm out. Doesn't want to do it, I'm out. Right? Or you do automatic stops in regards to short-term trading. Yeah, but I believe it is this word right here, to empathize, feeling what the market's really doing, not just telling you, but also feeling what the market is. So that's the biggest thing I can basically give you there, Jared.
Awesome.
Cool.
Thanks. That was good.
No worries. Well, I hope you enjoyed today's session, and we'll see you tomorrow.
Right, Ray.